Hey friends, welcome to the Singapore Market Digest for Friday, May 30th, 2025. I'm Iggy from the Investing Iguana, and today we're diving into what's been happening on the SGX. We've got some interesting corporate moves and earnings updates to cover today. From healthcare giants reporting mixed results to leadership changes at major conglomerates. There's plenty to unpack for retail investors like yourselves. The Singapore market continues to show resilience with selective opportunities emerging across different sectors. Starting with IHH Healthcare, one of Asia's largest integrated healthcare operators. The company just released their first quarter results, and the numbers tell an interesting story. Net profit dropped 33% to 514 million ringgit, which translates to about 156 million Singapore dollars compared to 768 million ringgit in the same period last year. Now, before you panic, let's break down what actually happened here. This wasn't about their core business struggling. The main culprit was accounting related, specifically a lower net monetary gain from financial reporting standards application. They also had a one-off benefit last year from a deferred tax credit related to asset revaluations in Turkey. When you strip away these technical accounting items, the underlying business performance becomes clearer. IHH operates hospitals across Malaysia, Singapore, Turkey, India, and China. They're basically the McDonald's of healthcare in Asia. Everywhere you go, you'll likely find one of their facilities. The stock closed flat at $2.09 on Thursday, which suggests investors were already expecting these results or are looking past the accounting noise to focus on operational performance. With Asia's aging population and growing middle class, healthcare operators like IHH remain positioned for long-term growth despite quarterly fluctuations. Moving on to some major leadership news. Keppel Corporation just made a blockbuster appointment. They're bringing in Piyush Gupta, the former CEO of DBS Bank, as their new deputy chairman and non-executive independent director starting July 1st. This is huge news for Keppel. Gupta transformed DBS from a regional player into one of the world's best digital banks during his tenure. His track record in navigating complex financial markets and driving digital transformation could be exactly what Keppel needs as they continue their own transformation journey from a traditional conglomerate into a more focused asset manager and operator. Gupta won't just be warming a seat either. He's joining multiple committees, including the Nominating Committee, Remuneration Committee, and the Board Sustainability and Safety Committee. This suggests Keppel wants his hands-on expertise across multiple areas of their business, particularly as they focus on sustainable urban development and renewable energy investments. The market liked this news. Keppel shares closed up 0.9% at $6.85, gaining 6 cents on Thursday before the announcement was made. Investors clearly see value in bringing someone with Gupta's caliber and experience onto the board, especially given Keppel's ongoing strategic transformation. Jardine Matheson Holdings also announced a significant leadership change. The Hong Kong-based conglomerate is preparing for a CEO transition as their current group managing director John Witt retires at the end of November. They've tapped Lincoln Pan as the CEO designate. Pan comes from PAG, where he's a partner and co-head of private equity. This background is interesting because it suggests Jardine Matheson might be looking to take a more investment-focused approach to their diverse portfolio of businesses. For those unfamiliar with Jardine Matheson, think of them as one of Asia's oldest and most diversified conglomerates. They have interests in everything from luxury hotels and restaurants to automotive and property development. Having someone with private equity experience could signal more active portfolio management ahead, potentially unlocking value from their various business units. The market responded positively to this news too. The stock jumped 2.2% or $1 to close at $45.60 on Thursday. That's a significant move for a large cap stock, showing investors have confidence in the incoming leadership and potential strategic changes ahead. Finally, let's talk about Cordlife Group, the private cord blood banking company. They're in the middle of what could be an interesting takeover situation that highlights the growing interest in biotechnology investments across Southeast Asia. Cordlife has appointed Novus Corporate Finance as their independent financial advisor for a voluntary conditional cash partial offer they received from a Thai company. The suitor is Medez Treasury, which is owned by Thai-listed stem cell company Medez Group. Here's what's on the table. Medez wants to buy a 10% stake in Cordlife. That's about 25.6 million shares at 25 cents per share. Now, here's where it gets interesting. Cordlife shares closed flat at 27 cents on Thursday. That means the market is pricing the stock above the offer price, which could suggest either investors expect a higher bid or they believe the company is worth more than what's being offered. The cord blood banking industry has been growing steadily as more parents become aware of the potential medical benefits of storing their children's cord blood for future therapeutic use. With Matheson's background in stem cell research and therapy, this could be a strategic move to expand their footprint in Southeast Asia's growing healthcare market. What we're seeing today reflects some broader themes in the Singapore market. Healthcare companies like IHH are dealing with the usual quarterly volatility, but the long-term demographics in Asia still favor healthcare operators. An aging population combined with rising healthcare awareness creates a supportive backdrop for the sector. Leadership changes at established companies like Keppel and Jardine Matheson show these firms are thinking about the future and bringing in fresh perspectives to navigate an increasingly complex business environment. The appointment of executives with digital transformation and private equity backgrounds suggests these companies are serious about adapting to changing market conditions. The merger and acquisition activity around Cordlife reminds us that Singapore remains an attractive market for regional expansion, especially in specialized sectors like biotechnology and healthcare services. The city-state's strategic location, regulatory framework, and skilled workforce continue to attract international investment. As always, these corporate developments are just pieces of a larger puzzle. The key is understanding how each company's fundamentals and strategic direction align with broader market trends and your own investment goals. Remember to consider factors like valuation, competitive positioning, and management quality when evaluating these opportunities. That's the scoop for today. Remember to do your own research before making any investment decisions. This is Iggy from the Investing Iguana, signing off.